Gentlemen, it's a very busy morning here. Thank you for joining us. Chad, I will start with you. What do you make of the pressure here today? It seems like a lot of others are saying, look, yes, this is the coronavirus, but it's also temporary. What's your read?
So that's the hope, that it is temporary, and history has shown that it has been temporary. With that said, going into this, there were large expectations for an increased acceleration of global growth. That is going to actually be tempered down quite a bit. And also keep in mind that market multiples, valuations, have been exceedingly high at roughly about 18 times PE multiple. So we believe that going into this year, investors should be a little bit more balanced in their portfolio. They should be a little bit more circumspect about global growth expectations.
And Chris, it's interesting that this does come at a time when Chinese markets are closed because of the new year, but also, a lot of things are closed as well in China because of now this virus, with Shanghai Disney being closed. Yep. Many, restaurants, movie theaters, everyone advised to stay at home for now an extended period of time. Are there any indications that we should be watching for the market? And just as concerned individuals, this may not be so temporary.
Well, look, I think that we're seeing, of course, in looking at any travel and tourism stocks. So again, I think as the movement of people happens, as Chinese New Year, when they actually typically travel the most, this is a bad time for an outbreak to happen. So as we see this as virus continue to mutate and multiply, it's going to have an impact on the economy. However, we think that the fundamentals of the economy, and especially the U.S. economy, are strong. And so, again, going into the Fed and Fed Reserve, the FMOC, and other things, I think we still see a pretty strong economy going forward.
Does this present at all an opportunity without sort of dampening the seriousness of the virus?
Look, I think this is an opportunity. I think that some people are taking some profit share right now, using this as an opportunity to do so. This is no way diminishing the real economic and health impact the virus is going to have. But I think that there's equities have been overpriced. There may be some profit taking going on and some resetting of the markets. But again, I think going into the FMOC, we see that the China Phase 1 trade deal, the USMCA, the Brexit happening, and parenthetically, our firm did a study and suggests that New York has overtaken London as a financial center. But I think overall, I think that the fundamentals of the U.S. economy and the U.S. consumer are going to continue to be the economic engine for the world in the short and near term.
Chad, if I can get your take on some other news of this morning. Just moments ago, really, we heard reports of a Boeing aircraft that has been downed in Afghanistan. Just another potential issue for this company to overcome. We know that they did get the 777 MAX off the ground in that test flight, so that is potentially good news, but an awful lot of cross currents, and it's important as a Dow component. How should we evaluate the move in Boeing, down about 2% at this point today?
It's an awful story, human tragedy. 2 steps forward, 3 steps back for this company. It looks as if it's going to be in the penalty box for several more months overall. When it comes to industrials, they're going to be tied towards global growth. We are overweight industrials at this point in time. With that said, we don't have such an optimistic economic forecast for global growth at 3%, where the IMF is at 3.3%. So overall, what we're recommending to investors today is that you overweight healthcare, you overweight consumer staples, you have good quality companies in one's portfolio that are growing profitable, well capitalized with not a lot of debt on their balance sheet. We would underweight or eliminate exposure to the EM, the emerging market side, and have some developed overall. But the overall asset allocation would be to be long the dollar at this inflection point within the market cycle.
And before I move on to you here, Chris, I just want to note that the CEO of Afghan Airlines is denying that it is one of his planes that has gone down in this reported accident. Still, Boeing shares are under pressure as we're still getting this information, down by about 2%. Chris, Chad brings up emerging markets, and it's been an interesting point for many guests and strategists on CNBC. And some say, look, it needs to catch up. It's been fallen behind. There's opportunity there. You're saying not so much. What do you make of that?
Actually, I agree. I think,
okay.
I think I would go long on the U.S. I think it's looking internationally, it's hard to see where the growth is going to occur. I mean, there's still negative interest rates almost everywhere, and there's not a lot of innovation, and then we have this compounding challenge of the virus and other issues. Brexit still has to work itself out. And so I think I'm very, very strong on the U.S. market and the U.S. economy and the U.S. consumer, less so internationally.
So the thing about the emerging markets is that China has been the global engine of growth overall for the last 5 years, and that's been based off a massive amount of credit growth. With any deceleration of credit growth there, that has a meaningful impact on the demand curve, not only for commodities, but overall for global trade. We believe that they will continue to decelerate. We're not anticipating a hard landing, but overall, we do think that'll have a meaningful impact on global growth dynamics, not only for this year, but going to the next 3 to 5 years.
Chris, we've got a really busy earnings calendar here. There's a lot to go over, and we don't have a lot of time left. But if you were to pick out a couple highlights for investors, what should we be watching?
I look at the tech sector. I think it's probably going to be the one that most people watch because I think it's as the one that could perhaps be the most volatile. So I would look at the tech stocks in general.
Absolutely. And I think Apple is going to continue to be one that we watch because of the size of that market cap, the weighting. Gentlemen, thank you very much for being here with us today.